talk about the noise. The whispers are getting louder, folks. Rumors of a planned stock market crash, supposedly orchestrated by the Trump administration. Is it real? Is it a conspiracy? Or just another headline to make you panic sell? This isn't about politics, it's about your money. The market feels like a coiled spring, with tension in the air and volatility rattling even the pros. Every tweet, every policy announcement, every new tariff threat sends ripples through the market. Wild theories thrive in this environment, and the idea of a president deliberately tanking the economy sounds wild. But enough people are worried that we have to address it. So what's our game plan? We're not hiding. We're doing our homework. We'll look at the real numbers, Trump's economic policies, and the facts behind the crash rumor. This is about empowering you with knowledge, your best defense against fear. We'll break down the market's current state, Trump's track record, the anatomy of the crash rumor, and what you should do right now. Forget the noise, forget the panic. It's time to think like a pro and protect your financial future. Are you ready? Let's ring the bell and get started. Let's get down to brass tacks. As of July 2025, the S&P 500 is up 7% for the year. Solid, but hard-won. The Dow and Nasdaq have seen gains, but volatility is the name of the game. Inflation hovers at 3.5%. Better than before, but still too high for the Fed's comfort. Interest rates remain high, keeping borrowing costs up and acting as a brake on the economy. The US dollar is at its weakest since early 2022, signaling global uncertainty. Gold is at $3,350 an ounce, and Bitcoin is roaring past $105,000. Investors are hedging for turbulence. The market is like a patient with a decent pulse but a lingering fever. Corporate earnings are solid, but macroeconomic headwinds, high rates, weak dollar, and geopolitical tensions are capping growth. This is a tightrope market. It could break out or break down in a hurry. Uncertainty is fueling wild speculation. Investors are preparing for anything. The market's vital signs are mixed, and that's why the rumors are swirling. It's a market on edge. Stay alert. To know where we're headed, you have to know where we've been. Trump's economic playbook, go for growth, break the rules. The 2017 tax cuts fueled a 35% Dow rally. Lower taxes, higher profits, higher stocks. But tariffs were the bitter pill, spooking markets and disrupting supply chains. Wall Street hates uncertainty, and trade wars brought plenty. Fast forward to 2025, Trump's One Big Beautiful Bill proposes $2.4 trillion in new spending and debt, plus targeted policy moves like axing the EV tax credit. Tesla's in the penalty box, and the market is struggling to digest the impact. Since January, the S&P is up just 1.5%. Momentum has stalled. The market is weighing tax cuts against new tariffs and rising tensions. Trump calls it a transition, not a recession, but investors are nervous. The playbook is familiar, but the stakes are higher. The market is cautious, waiting for clarity. The next move could be big. Let's dive into the planned crash theory swirling on social media. The rumor the market is overvalued and the administration wants a controlled crash to reset the economy. Supposedly, insiders are repositioning portfolios, selling stocks, and buying hard assets. There's no evidence, just speculation and fear. It's a story that feeds on distrust and anxiety. No official statements, no credible leaks, just digital campfire tales. But the fact that it's spreading says a lot about the national mood. Why is this rumor catching fire? Because it taps into real public anxiety. Nearly half of Americans fear an economic slowdown, and more people feel worse off financially than just a few months ago. Consumers are switching to cheaper brands and cutting back on spending. The planned crash rumor gives a face to that anxiety, making it feel explainable, even if it's terrifying. It feeds on distrust of institutions and the sense that the system is rigged. Billionaires get richer, while everyday people struggle. The theory fits a narrative of manipulation, even if it's not true. Experts say the fears are real, even if the conspiracy isn't. The rumor is a symptom of deep economic insecurity. The idea of a controlled crash is a fantasy, like planning a hurricane. The market is chaotic, driven by millions of emotions, not levers and buttons. History proves it. Black Monday 1987, the 2008 crisis, the COVID crash. None were planned. All spiraled out of control. Once fear takes over, it's nearly impossible to contain. Governments and the Fed scramble to stop crashes, not cause them. Real crashes devastate savings, businesses, and jobs. No rational leader would risk that chaos for political gain. The downside is too catastrophic. When you hear talk of a controlled crash, be skeptical. The real risk is always losing control. Crashes are never neat or predictable. In this market, you can't just buy the index and hope. You have to pick your spots. Losers, electric vehicles. Tesla's down 25% after the EV tax credit was scrapped, and a Musk-Trump feud rattled confidence. Big tech is sputtering. Giants like Nvidia and Netflix are volatile, and crypto stocks are falling with Bitcoin. The easy money in tech is gone for now, but there are winners. Casino stocks like Las Vegas Sands and Wynn are up, thanks to a Macau gaming boom. This is about global recovery, not DC politics. Nike is thriving, riding the wave of women's sports popularity and smart partnerships. Robinhood is up 160% year to date, bucking the crypto slump with new products. Innovation and strategy still create winners, even in tough markets. Not all stocks move together. Find the pockets of strength. The market rewards adaptability. Look for companies riding real trends, not just headlines. In choppy waters, stock picking matters. Stay nimble. So, what should you do when the headlines scream crash? Rule 1, don't panic. Emotional decisions destroy wealth. Selling in fear means selling at the bottom and missing the recovery. Rule 2, tune out political noise. Focus on fundamentals, not who's in the White House. The market moves on earnings, innovation, and rates, not politics. Rule 3, diversify. Own stocks across sectors, some bonds, maybe a little gold or real estate. Diversification smooths out the bumps and helps you sleep at night. Rule 4, keep a long-term perspective. Are you investing for next? The market's ups and downs are just noise in the big picture. Corrections and bear markets are normal. Stick to your plan, invest regularly, and trust the process. That's how you build lasting wealth. We've dissected the market, Trump's playbook, and the crash rumor. Bottom line, a deliberately engineered crash is fiction, a ghost story born from real anxieties. The market faces real headwinds, inflation, high rates, and debt. Focus on facts, not conspiracies. This is a market for stock pickers, not passive believers. Your job, act like a pro, not an amateur. Stay calm, diversify, and keep your eyes on the long term. You can't control Washington or Wall Street, but you can control your actions. Educate yourself, stay disciplined, and build a resilient portfolio. Don't let fear dictate your strategy. Do your homework, trust your plan, and make the smart move. It's your money, your move.